Welcome back to Power Breakfast on CNBC-TV18. Now we have a team of research joining in with us to set you up for trade as well as tell you the cues in the world of F&O. Mamakshi, what are we watching out for in terms of a trade setup today? Muted start is what we should keep an eye out on, right?
Well, absolutely. When yesterday was a day where the markets ended with some minor cuts. It was the second consecutive day of decline. And what we've observed over the last couple of sessions is that there has been some hesitation in buying at higher levels. Well, let's see whether or not that trend continues. The broader market sentiment remained under pressure. The mid-cap index bore most of the brunt with a cut of almost 0.5%. Sectoral indices too mostly ended in the red. IT, metals, realty were some of the top losers as far as the sectoral indices are concerned. But auto and banks on the flip side were the only sectoral indices which ended in the green. As far as today's trading session is concerned, a couple of economic cues that we need to watch out for is the Bank of England's interest rate decision. The US markets, of course, will be closed on account of the Juneteenth holiday, so no cues from the US markets today. As far as specific stocks are concerned, we'll be keeping an eye out on Siemens Energy. The stock will be listing today, and keep an eye out on a couple of stocks on the back of fundraise as well. The GIFT Nifty will come up for you on the screen. It does indicate a red-looking start for the Indian markets. But Mangalam, what are the cues in the F&O space indicating?
Well, very interesting cues coming in from the F&O space. And why do I say that? Because, yes, we have been in a bit of a range. Yesterday, the close was mildly lower across major indices. The IT index was the one that underperformed, even as the Nifty Bank supported it. The GIFT Nifty indicating a mildly negative start. The important part, however, that no major changes in flows coming in from both cash and futures in the FII purchase. So DIIs and FIIs, both of them purchased about 1,000 crores a piece in cash market. Futures, 44 crores was the purchase. Longs not changing much, just around 20%. But it's weekly options expiry today. And as you pointed out earlier, the US markets are shut today, which implies that FII volumes would be slightly thinner. And ahead of weekly options expiry, they've actually gone ahead and sold a lot of index options. What have they gone ahead and sold? They've sold 62,000 call contracts, which tells you that there could be supply at the higher levels. But more importantly, if the market holds on to higher levels, buoyed by domestic money, then these short calls will have to cover their positions. And that may lead to a big surge in the last hour of trade. That's what the data is indicating. So 24,800 call writers, fairly active. 24,900 call writers, fairly active. Combined premium tells you supply should be between 24,890 to around 24,950. If the market sustains at these levels, then there is a big up move, which is likely in the last hour of trade. That's what the data is suggesting. 25,000 call writers are active as well as 24,750 put writers. For the market to show any signs of an up move, we have to trade sustainably above the 20-day moving average on the Nifty, which is at 24,841. What leads it higher today? Is it the Nifty Bank? Will it be the IT index? Because yesterday, despite the weakness on Wall Street, the Nasdaq ended mildly in the green. Two stocks I'm watching out for. Biocon, we pointed out, may enter F&O ban, and Ireda could have exited F&O ban is something that we said, and that's exactly what has happened.
Okay, Mangalam, thank you so much for